Hi students, 12th Standard Accountancy, Chapter 5, Illustration sum number 5. Let's read the question. Sriram and Raj are partners sharing profits and losses in the ratio of 2:1. Nelson joins as a partner on 1st April 2017. The following adjustment are to be made. Okay. So from the given information, we are going to pause, give journal entries and prepare the revaluation account. Okay. So first information is increase the value of stock rupees 5,000. Stock belongs to which account? Asset account. So asset account increases. Stock increases means asset account also increases. If the asset account increases, what is the journal entry? What is the format? If the asset account increases, revaluation account is to be credited. Okay. Then second information is bring into record investment of rupees 7,000 which has not been recorded in the books of the firm. So investment belongs to which account? Investment is an asset account. Investment is no forget to record in the accounts book. So we are going to record it now. Okay. So bring investment 7,000 rupees. So asset account increases. Investment is an asset account. It forget to record into the accounts book. Now we are going to record it. So investment account increases, which means asset account increases. If the asset account increases, what is the journal entry? What is the format? Asset account increases, revaluation account is to be credited. So coming together, we enter revaluation account is to be credited and stock account respective concern asset account, that means stock account and investment account is to be debited 5,000, 7,000 respectively. Both are add together, you will get 12,000 rupees, and within the bracket narration is stock account increased and investment account unrecorded is to be recorded. Okay. Next one is reduce the value of office equipment 10,000 rupees. A provision would also be made for outstanding wages for 9,500. Listen. Office equipment is an which account? Office equipment is an asset account. Office equipment means a table, chair, cupboard, sofa, teapot, right? Computer table, file keeping cupboards. These and all collectively called as office equipment. It belongs to whether asset account or liability account. Office equipment belongs to asset account. It is reduced. Reduce the value of office account, office equipment 10,000 rupees. If the office equipment reduced means asset account reduced. If the asset account reduces, what is the format? If the asset account reduces, revaluation account is to be debited, revaluation account debtor. And the fourth information is provision. A provision would also be made for outstanding wages 9,500 rupees. Outstanding wages means you have to imagine yourself, you are the partner. You are a partner of the one of the partner of your firm. You give some work to your worker. The payment is not made. 9,500 payment is not made. That is outstanding wages. Okay. You have to pay to him. You have to be paid. Firm has to pay. Okay, so firm has to pay means it's an expenses. Okay, so if the expenses means your expenses increases, outstanding wages, your expenses increases means what is the journal entry? So expenses means your outstanding wages is an liability. If the expenses increases means revaluation account is to be debited. Okay, so revaluation account is debtor. To office equipment 10,000 rupees, to outstanding wages account 9,500 rupees. We have to add both the amount, you will get 19,500 is to be entered on debtor side. Okay. Then you are going to you are going to prepare the revaluation account for these two journal entry. Okay. So you have to leave some space. Okay. After that you are prepare the revaluation account. Okay. So on revaluation account, where is the revaluation account? Which side revaluation account is appear? The first transaction revaluation account is appear on credit side. Okay, so you go to credit side. What you have to write? The opposite entry. What is the opposite entry? To stock account and investment account. So you are always started with the buy, with the word buy on credit side. Buy stock account 5,000, buy investment account 7,000 rupees entered, and then on next transaction, where is revaluation account appeared? It is appear on debit side. So on revaluation account, you go to debit side, right? You have started with the word to. Okay. So what is the opposite entry? What is the opposite account from the revaluation account? That is office equipment account and outstanding wages account. So you go and enter on debit side to office equipment account 10,000 rupees, to outstanding wages account 9,500 rupees entered, right? Now we are going to, so from the given information, we pass the journal entry. From that journal entry, we are prepared the revaluation account. Now we are going to find out the total and the balancing figure. Okay. So to find out the balancing figure, first we are going to find out the total. So for that, which side we have the higher value? Debit side or credit side? Debit side we have the higher value than credit side. So how much rupees? 10,000 plus 9,500, 19,000 rupees higher value than credit side. So we have to consider that 19,500 rupees as the total. We have to enter the total on both debit and credit side equal same horizontal line. We have to enter the total equally same horizontal line, 19,500, 19,500 entered on both debit and credit side. Okay. Now, if you get the total on debit side, you will get the difference value on credit side, right? As per the format, if you get the total on debit side, you will get the balancing figure on which side? Credit side. So, how much rupees? 5,000 plus 7,000, 12,000 rupees. After subtracted 12,000 from total 19,500, you will get 7,500. That is the difference value. This is the loss. If you get the total on credit side, you will get the profit on debit side, right? But here, you will get the total on debit side, 19,500. You will get the total on debit side. So, as per the format, you will get the loss. Balancing figure on credit side, how much rupees? 7,500 rupees. So, that loss of revaluation transferred to the old partners capital account to their old profit sharing ratio. So, who are the old partners? Sriram and Raj. Okay. Now, we are going to transfer this loss, accumulated loss to the old partners. What is the ratio? Their profit sharing ratio is 2:1. Old profit sharing ratio is 2:1. So, 7,500 into 2 divided by 3. 1, 3 is 3. 2,500 rupees. Okay. Into 2, you will get 5,000 rupees belongs to Sriram's capital accounts. Transfer to Sriram's capital account. Under Raj's capital account, 7,500 into 1 by 3. 1 3 is 3. 25 3s are 75, right? 2 zeros to be added here. 1 into 2,500. You will get 2,500 rupees transfer to Raj's capital account. So, this accumulated loss 7,500 transfer to the old partners named as Sriram's capital account and Raj's capital account as per their old profit sharing ratio. Now we are going to pass the journal entry for this occurrence loss of revaluation. Which side revaluation appears? It is on credit side, right? By loss on revaluation appears on credit side. So you have to enter or credit the revaluation account 7,500. On debit side, you have to write Sriram's capital account debtor 5,000 rupees and Raj's capital account 2,500 rupees. Okay. What is the narration? Loss on revaluation transferred to the old partner's capital account. Okay. Then you have to close the account. Do you have any doubt? Please comment it in the comment box. Thank you. Take care.